Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, in the last 24 hours, it's been quite an interesting challenge right across the board, beginning with the Australian dollar as the market took a surge towards the upside. And as you can see from the market's challenge, it hit the 60-day moving average at 73.14. Now that was the high before rejecting and settled back towards 72.5, where it's currently trading at the moment. It is assessed that I believe the market will take the challenge to the downside to 72.25. A clear break or decisive break at 72.25 would expose the next region of 71.65 to 70.95. If we do see the opportunity of seeing any rally towards the level again of 73 figure 30, then I would take again the opportunity to shorten the market and keep stops above the 30, somewhere around 56 to 66 on 73. Well, the euro is getting very close to this level of 116.90. Now, a break beneath there would give further exposure to the downside. It is assessed, though, that while the market is holding just above that level, it is the trigger level to confirm the move down towards 115.2030. And also, the break of 116.90 would confirm the bearish outside range day. So there's a couple of indications still waiting to support the bear case, but look at the MACD and also the RSI. The marriage there is nearly quite close to support the bearish case. I would like to see the ADX eventually turn, but at present it's not quite fully reversed yet. But the warning signs are there. If we sit to say a break of 116.90, I would be looking to sell. Resistance 117.95 to 20, and above 118.20 would give me a neutral view. Well, as I show some caution about dollar yen, you can see that we've got an outside range day, and from the rejection above the 113 handle does look now towards the region of 111.80 as a potential target. On the day though, resistance is still seen around 113.35.55, which was rejected overnight. Sterling, as you can see there, the support now trading as a resistance, clearly containing any rally. And at present, though, I'd still expect to see the pound to fall. There's still quite a lot of concerns coming out of the pound when it comes to the Brexit. And with a deal on the table that looks like it's going to be a bad or no deal for Brexit, so-called from what the British Prime Minister Theresa May has stated, is the fact that we could see further weakness into this week and into next. I would like to see a break of 130.60 though to support the bear case down to 128.40.80 where the safety net is holding, and any rally towards 132.20 to 132.60.80 as a potential cap. Gold, well, after posting a relatively fresh high not so long ago around 12.12, is the fact the market took the challenge to the downside as expected after the Fed did hike interest rates. Now, early this morning, the Fed raised interest rates by a quarter or 25 basis points and increased the funds rate range from 2% to 2.25. The central bank said in a statement that its decision was in response to the country's faster pace of economic growth. The greenback surprisingly remained unchanged, although it had risen slightly earlier. The greenback strength against the six major currencies fell at one point to 93.50 before rallying back to 93.98 and is now trading at 93.85. So with September's hike now in place, the market is now pricing in another rate hike increase for December. This will be the fourth for 2018. I do believe the gold will be under further pressure. Now, a break under 89 would see a view towards 76 to 79, where I'll be looking to buy. But other than that, the market's still trading sideways. And to round off with oil, well, I expect to see the market to focus back to the downside soon, as it still appears to be contained by the resistance, which is seen around 73.15.35. Overall, though, I do expect to see any challenges to the upside too fail, and therefore could see a move back to the downside, as I say, towards a region that comes in somewhere around 7140 to 7080. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.